So for those of you who've just joined, I know there was a big chunk there. A couple of housekeeping items as well in terms of the CE credits and the continuing education courses. Just be mindful, they will take 10 business days or up to 10 business days to process. So just keep that in mind in terms of after. Please let us know if after 10 business days you have not received them, then we will ensure to resend them to you as well. But given the quantity and number of registrants and participants we have on today's webinar, just please be mindful. We will be looking to have those distributed as quickly as possible and sent to you via your email. Double check your spam or junk folder just in case, but they will be sent again in 10 business days or within 10 business days. And for the question and answering, so you will see on your bar, whether it's on the top of your screen or on the bottom, there is a Q&A section for any questions and answering. So throughout the webinar, if you do have any questions, please do. I encourage everyone to utilize that. I'll be answering questions throughout. If there are questions that I will be covering later on in the course, just keep in mind I'll either be addressing them later on or at the end as well. I will be going through and answering any outstanding questions at the end. I will ask that everyone keeps their questions for the most part. In general, for commercial real estate, any specific state or province questions, happy to address and answer and discuss more on a one-on-one basis, as for today's purpose, would want to ensure that it's beneficial for all. So we'll get started here. So I want to welcome everyone to our course on the dental office lease negotiations and preparing to reopen post-COVID-19. So I want to welcome everyone to the course. I hope everyone is well and healthy and glad you're able to join. So obviously going through the last 8 weeks-ish with COVID starting, there's been significant change. Offices has been shut down. Cash flow has been severely altered, whether it's minimized or shut off, depending if emergencies are being taken at the clinic or not. And navigating the last couple of months has certainly been interesting, and we've have a lot of updates that we're actually going to be providing through the webinar today. And the next phase is the reopen. So many areas in Canada and the United States have opened up already. Certain states, certain provinces as well. So we will be touching on a few of the different aspects, what to expect or potentially expect, depending on where you are, and some of the different laws or different attributes that have been implemented, whether it's by the ADA or the Dental Association, that need to address in terms of hygiene, oral care, and how the timing between each patient, with everything going on right now and limited opening and social distancing, how that's all impacting a practice. But I'm going to do a quick poll quickly before we get started, so I can help cater my presentation and this webinar to kind of the group as well, between how many doctors are in the United States and how many are in Canada. So this will help me as I go through cater to a little bit more of the majority as well, as I want to ensure it's as relevant as possible to you. Now we will be going into a little bit more background in terms of myself, Cirrus, and how we operate, who we are, what we do, and all that sort as well, to give everyone a little bit of background, as I believe it's very important to know, as if we're advising or providing recommendations or factual aspects in what we're seeing, everyone needs to know our experience in the market. So we'll take a quick second here to go through the poll. So for those of you who missed my name on the previous slide, I am Ryan Cathers, and I am the manager of healthcare leasing here at Cirrus Consulting Group. And Cirrus Consulting Group is a healthcare tenant and dental specialized representation firm who was founded by dentists for dentists in 1994, so just about 26 years ago now. And we've now negotiated over 12,000 leases since inception. And the way our firm is uniquely structured is we have everything in-house, where we have an in-house leasing team, that have access to rental rates and comparables in any given market. We have an in-house legal team comprised of highly experienced real estate attorneys and lease negotiators with a background of healthcare and tenant representation. And we have an in-house consulting team that essentially work alongside the leasing legal team to really help develop a strategy for the negotiation. And so we really work with dentists through the whole process of commercial real estate and supporting it. On an annual basis, to give you an idea, we represent over 500 doctors each year throughout North America. And we provide and deliver over 100 continuing education courses each year. Now, many of these obviously recently have been in the form of a webinar, but we do provide in-person seminars and continuing education courses in person as well when travel is due. So whether it's on the East Coast where you're looking at Boston, Eastern Canada, Western Canada, through California, San Francisco, LA, and top to bottom as well, where we really stretch across each corner of North America. Now, we also lecture at most of the major dental conventions, in the Greater New York, Pacific Dental, the Yankee Dental, California, the Ontario, the PDC, the Pacific as well. So we truly represent dentists nationwide. Now, 85, 54, and 80. 85, 54, and 80. 85% of dentists have a lease that can prevent them from ever selling their practice. 85%. 54% of dentists across North America are overpaying in rent for their practice. And it's interesting, in the in-person courses that I host, I always ask this question at the beginning. Who feels like they're overpaying in rent? Typically, there's a bit of a chuckle through the room and everyone raises their hand. But according to the stats, 54% of dentists across North America are actually overpaying in rent. And 80% of landlords structure their lease to give them the right to at least 50% of the sale proceeds of the practice. So when you sell the practice, it's structured in the lease that the landlord is entitled to 50% of those sale proceeds. 85, 54, and 80. A few astonishing stats that many don't believe are there. Now we're going to touch on a few of these components as we go through the seminar and webinar as well. So the purpose of today is preparing to reopen and the office lease and how it's going to be affected and impacted based on the reopening. So whether you've recently reopened or are in the process of reopening or preparing to reopen. So national updates, to give everyone an idea, in terms of rent deferment and abatements, there has been a significant change through the last 8 weeks. Obviously, it's typically not something that is ever a conversation with the landlord in terms of abatements and deferments. But with everything going on, it's been truly amazing in many cases, not all, but many, where landlords and tenants are working together to get through, making different various arrangements, typically of a financial nature, with cash flow cut off, to help make it through, particularly in the short term. So what the many have been is, let's take a look at any sort of variation of anywhere between usually 1 to 3 months, and let's figure it out from there. Many are unwilling to commit to a long-term deferment or abatement, which we'll get to in a little bit more detail in a few minutes here. But many are figuring out, similar to the tenant, landlords are taking a look at that as well. Now, not all. There have been many, many landlords that have taken a strong stance on no deferment and no abatements. That being said, there are ways of increasing the probability of them saying yes, and to what degree. Now, how to utilize that leverage, we'll be getting into in a few minutes. Which lease items to look out for? Yes, there are items specifically when you're reopening that you may not know in terms of your obligations that you may have or may have lost through this COVID period, depending on what's been going on in your situation. We're also going to touch on practice acquisitions and exits. So many of you, I'm sure, or have known someone who have been severely impacted by either buying or selling their practice. With everything started, how do you appraise a practice when everything is shut down? How do you predict what's going to happen when everything opens back up? I've been asked by many, if I could walk away, should I? Could I? How to structure your lease post-COVID-19. So there's been a tremendous uptick in terms of new start projects we've been involved in, and renewals, and some of the different changes and alterations in the lease that not only landlords, but we're making in terms of adding this type of pandemic language. Something like COVID happens again or continues to happen. And what to look out for. So again, I mentioned this a couple times. Critical to know what your obligations are within your lease and how they can impact you, not only from a business standpoint, but from a personal standpoint as well. And landlord negotiation strategies. So some of the tips and tricks that we use and utilize in order to assist our clients in getting the best deal possible, whatever it might be based on their situation, whatever their needs are. And again, for question and answering, I'm happy to go through the questions and answers. So everyone will see on their bar their Q&A section. So I do encourage everyone to utilize that throughout. If you do happen to have any questions, if it is relevant to the topic I am speaking about, I will be addressing them. If it is something I'm touching on later, or I can touch on at the end, I will be as well. But for those of you who've just joined, we've had a significant increase. So just a quick housekeeping, CE credits will be sent 10 business days after the webinar, or within 10 business days after the webinar. If you do not receive them then, please do let us know. And the Q&A section will be available for any sort of question and answering as well throughout. In terms of national updates, for US and Canada, we're going to go through a few different ones as there's similarities and differences as well. So the request for financials. So what probably about 70% at least of doctors have received when they've approached their landlord over the past 8 weeks for any sort of a rent abatement or rent deferral, landlords have instantly asked for all sorts of financials, their tax documents, their personal income, their business income, everything. Their left arm. And depending on how your lease is structured, it may or may not be right or correct, depending on the situation. And so obviously looking to avoid having to provide those types, as it doesn't only impact you now, but could potentially impact you in the future. Information can be very, very powerful. So is it necessary? What's the situation? Can we avoid it? Rent deferrals. So for those of you who are unfamiliar with the term rent deferral, and I will touch on rent abatement and the difference between the two in just a second, but a rent deferral is essentially deferring rent from today to a future date. And there's typically some sort of agreement in terms of how it's being paid back, if it's interest-free or if there's some sort of interest. For example, there's been a couple of different cases where in one case, we were able to defer 2 months of rent, and this particular landlord wanted interest, would not agree to deferral as there was significant amount of term left on the lease. What they did is they added on 2 months to the very end of the lease. The doctor had to pay 2 months at the end. of the higher rent, and that was the interest exchange. Others, there's been some sort of amortization payoff. One recently was 3 months deferred, and it didn't start till next year, 2021, and it would be paid over equal payments over the 12 months of that year. So there's a variety of different ways of having it structured, but it's not forgiven rent, it's rent that is deferred from today to a later date. Rent abatement is rent that is essentially forgiven. So whether it's a percentage of it, whether it's 1% to 100% of rent abated, means you do not have to pay that back to the landlord. Now, everyone may say, well, this is what I'm asking for, and this is what I want from my landlord. Unfortunately, that's not always the way it works. Depends on your situation. When does your lease expire? What is the leverage? Because don't forget, if the landlord's not getting that revenue, they're going to want something in return. So many have not even responded to these types of requests for any sort of abated rent, because what are you really asking? You're asking them to give you a free ride or a partial. It's not their fault COVID is going on. So they're thinking the exact same thing. So we'll touch on a few different strategies moving forward as well, and how to maximize on these types of deferrals or abatements depending on your situation. Now, my landlord agreed. Now what? So in terms of these types of conversations, I've had doctors say, yeah, I spoke with my landlord. They agreed to not have me pay April or May rent, and we'll just pay it back at a future date. Major, major, major issues. If there's nothing written, it doesn't exist. Unfortunately, back were the days where handshakes meant something. What landlords could do, not to say they will, but they could come back and say, you've been in default for April and May, have not paid your rent, we need that immediately. How does this impact? Now you've been considered default of your lease. What benefits and conditions have you just triggered? Which we'll touch on in a few minutes as well. There should be, if there's any sort of agreed deferral or abated or some sort of relief that has been agreed upon between landlord and tenant, there absolutely needs to be some sort of documentation on it. Typically, in our experience, most of it's been a 1-page, maybe 2-page, that outlines what's been deferred or abated, how much, and when is it being paid back if necessary, and the full process for it. So there's proper documentation covering this. Post-COVID alterations. So this is very, very important, as I know many are looking towards the Dental Association to see what type of restrictions are they putting on, or what type of upgrades do you need to make to be allowed to practice dentistry. Many of them are air filtration systems, things of that nature. Are you allowed to upgrade your HVAC system or adjust it accordingly? Or do you need the landlord's consent to do so, or to make any changes, to put up a wall, to make your open bay office into private rooms? What are your obligations through this? So very, very important that these are answered, because it's all outlined in your lease. And if you're unsure, it's imperative that you review that, or have someone like us review it as well to confirm. Renewals and new starts. So there's been a tremendous change in terms of, depending on the property you're in and the landlord situation, many have taken an instant approach to this and taken advantage of the situation. With malls shut down, for example, many of the comments I've received, and is factual, is tenants in malls are not paying rent for the most part. Is this a good time to negotiate with the landlord? 100%. If you're the only tenant paying rent and you're asking for a renewal, How much more leverage do you have if no one else is paying or there's vacancy? You're a strong tenant, long term, and you're asking to stay longer. Immense and tremendous opportunities. Similar to new starts, there's a vacancy in the building. Landlords are looking for someone to fill it. They're offering tremendous financial values, whether it's in the form of rent, escalations, free rent, TI, fixed rate periods, all of the above. So there's been a tremendous opportunity through this period as well. So in terms of one of the questions here, it said, hi there, thank you for this seminar. I have a question. I own my unit in a medical building. I don't pay rent, but I pay a hefty monthly fee. Can I defer that or abate it? So it depends, is the monthly fee, that would be dependent on if that is the condominium corporation or what the monthly fee you're referring to is. Is it a mortgage? Things of that nature. That will depend on what you can do and the answer for that. So happy to take that separately as well in terms of if you're an owner occupant of your building. Many of it will depend on what type of building, the tenants, depending on your question, and if it's a condominium type of corp or setup, a variety of different types of answers for that. What to look out for before reopening. A few things. In terms of your lease, when does your lease expire? Going to be very relevant in terms of the next conversations. What is the landlord going to do? How are they going to respond? And what are they going to be willing to offer? Your lease expiry becomes and plays a critical role. As if you're coming up for expiry in the next 2 to 2.5 years, very different type of conversation than someone looking with 8 years left of term. And I'm not talking about including options to renew, because that is not the term that you committed to today. It's the initial term that you're committed to, and you do not include the options to renew. Are there options to renew? So if you do not have any options to renew, your landlord is under no obligation to extend your lease further. Very different type of conversation. Not to say they wouldn't renew you, but a different type of conversation. So very important and critical that timing is followed. And we're going to get to a little bit more detail in just a little bit here, but absolutely critical, timing is followed. Who is the tenant? Are you personally signed on the lease, or is it your corporation? If it's a corporation, have you provided a personal guarantee? Typically for my courses, 90% of doctors that are at my course have either signed a personal guarantee, personally signed their lease, or without even knowing, have some sort of personal liability built in. Very important to know what these types of terms are before reopening. Monthly financials. So talking about April and May rent, have you already been forgiven or deferred that rent? Have you been paying it? Is there a conversation to have additional months deferred or abated? So just because you did not take advantage of or needed the relief in April and May does not mean you don't deserve it or cannot get it now. So we've seen a lot of change in conversation where, many doctors didn't need it at first. Now it's become a topic of conversation. So in terms of a question here, there's a rent escalation. Taxes are coming up in June. They are large and based on property values, I believe, which are going down. Landlords are protesting this. Should I? So it depends if you are a tenant or a landlord of the property. will depend on what you can and cannot do. And then your lease, if you're a tenant, will outline what your obligations are, what you can and cannot do in terms of having them protest it for you. Because you cannot, as a tenant, protest to directly, if it's not your property, to the government. But it can be outlined in the lease, depending on how yours is structured, to protest this aspect. Certainly could be an opportunity, will depend on how the lease is structured and the specific situation, but potentially an opportunity. Look out. What else to look out for? Default. So I mentioned this before. I'll bring a few of these examples up. What are the default provisions in your lease? What constitutes a default? Does the landlord have to notify you? Do you have a cure or remedy period? How is your lease structured? So a big aspect and question that I ask in my seminars is, what constitutes a default? And obviously, typically it's a two-way conversation and communication, but this particular case, given it's one way, what constitutes? A majority will say not paying rent. And you're right, that is probably the most common course of default, but it's not the only one. If you're in a strip plaza or a mall, there's typically a minimum business hours or continuous operation clause in your lease where you have to be open a minimum amount of time, days and time. If you're not, you can be held in default. There was a doctor who was coming up for her option to renew, had originally signed a 10-year term with 2 5-year options to renew. Was in year 9, went to express her option to the landlord. The landlord said, no, thank you. And they wouldn't tell her why. We had eventually gotten involved and reached out to them. They sent us an email, including 2 things. 1, a picture, and the second, an article number. The picture was of her front door of her practice, outlining the days she's open. Monday to Friday, 8 to 4, closed weekends. We went to the article number in her lease under the default section, under minimum business hours. Monday to Friday, 8 to 5, Saturdays, 8 to 2. She was in default of her lease. How does that impact you? Whether it's you've made renovations that were not outlined in the alteration section, you did not get consent. How does that impact you? Are your options to renew tied to default? 99.9% of times they are. If you're ever in default of your lease, there's typically a couple variations. Sometimes there's either 1 default or you have a leeway of 3 defaults or some sort of variation. But many of them become void. Does the landlord have a termination right? If you have an exclusivity, is that still relevant? Or is it conditional on you not being on default? If you're in default and you've already removed a personal guarantee, but if you've triggered a default, does that bring it back? We haven't talked about a non-disturbance or subordination agreement. So for those properties that the landlord can't pay the mortgage and they go under foreclosure, does your lease have it structured in it where you're to have a non-disturbance agreement where if you keep and continue upholding your lease obligations, paying rent, etc., then you cannot be disturbed? Does it have that included? Or can they terminate your lease? It can impact the assignment and your ability to sell the practice. Either take it away or limit it. Very, very important to know the default section of your lease. If you don't, and are unfamiliar with it currently, please look to address it now. Now, in terms of practice acquisitions and exits, there's two different types of categories. So, and these are the types I've been speaking with doctors. I must sell right now, I'm walking away. Or can I even sell? Or should I wait to sell? So it's certainly been an interesting conversation to go through because it depends on everyone's situation, how the lease is structured, what liabilities do you have in your lease? Can you sell or can you walk away? Do you have a personal liability on the lease? There's a doctor in California, Southern California, that I was speaking with last week. She wanted to walk away from her practice. Had another year and a half left on her lease. Had signed it personally. $5,500 in rent each month. All personally liable. Can you sell? Have you been in default? Are you currently in default? So all of these are questions will all pertain and be specifically outlined through the lease as well, and based on what you're looking to do. Working with a doctor right now who originally wanted to work another year, build the practice back up, sell for higher value. We pivoted, decided, you know what? I'm selling right now. I'm cutting my losses. I'm selling for what I can, and I'm walking away. I'm retiring. He didn't want to go back through the grind of working the practice back up, which is fair. To each their own. It all depends on what your goals and strategies are. We can help recommend and provide guidance, and in many cases, get you there as well. The difficulty of financial modeling. So as an owner occupant, so this is one of those times where many have asked and mentioned, well, owning your property is the best thing for you. It's the best return on investment. Now, I'm not disagreeing at all. I'm a big believer as there's pros and cons for both owning property and leasing property. Depending on your long-term strategy and how much capital you'll need for that long-term strategy, both can be applicable. But right now, many are finding out as an owner-occupied tenant, whereby you own the property that you practice out of. What happens if your practice is closed down? Are you a single tenant? So the only cash flow coming in to pay the mortgage, the practice debt, is no longer coming in. Are there other tenants where you pay a portion of it, but what happens if the other tenant isn't paying anymore? What happens? So there's certainly pros and cons of each. Now, what do you do? That's the question. Now, what's your plan? Is whatever your plan, your goals, your vision are when you reopen, how many days you're open for, operating for, whether you're looking to sell or buy, looking to renew long-term or stay just short-term, if you're looking to relocate or acquire property nearby, is your lease aligned to your goals and your plans for the practice or your potential exit? If you had to walk away, could you? What does your lease state? What's your liability exposure? Is it even possible? Why is COVID or the office lease so important during COVID? So first and foremost, your office lease is the foundation of your practice. Foundation. It ties that relationship for the practice to where your patients go to that space. No lease, no space, no place for the patients. So that's why it's very, very important to have a lease in place and a properly structured one. Failure to pay rent could be catastrophic. So we already touched on a number of the default aspects and provisions and how that can trigger much, much more. I haven't referenced yet, if you default today, in many leases, it's structured where it would trigger the next 3 months of rent in acceleration. So now instead of owing, for example, $5 a month, now you owe $15,000 plus the extra $5,000 for that current month. can become much more expensive. Or loss of exclusivity, loss of options, loss of right of first refusal to expand or purchase. Many different impacts. The investment and cost to build. It's obviously, as many have either found out while building out or acquiring or making renovations, very, very expensive to build out a practice. So depending on where you are in the country, the general rule of thumb is typically anywhere between 150 to 250 a square foot. Now, again, that keep in mind, that depends on the quality, the size of the practice, the quality of the construction. If you're in somewhere like downtown San Francisco where there's union laws, looking upwards, I believe it was $600 or $700 a square foot now. So it can vary, but the bottom line is it's expensive. So when you do it, you only want to be doing it once or at your own discretion and not anyone else's, because it's very difficult, expensive, and time consuming to move. On average, it takes anywhere between 18 to 24 months to relocate a dental practice. From the concept or idea that you need to or want to relocate, all the way through finding space, negotiating the lease, designs, permits, construction, doors open. From concept or idea to doors open, 18 to 24 months. Now, if you're in an area with very little vacancy, availability, much longer. There's been doctors in, whether it's Southern California, the Vancouver area, Toronto, New York, that have been looking, depending on where they are in that specific area. There's nothing nearby that's attractive. So some of them have been taking up 3 years plus to find a space. Typically, the long aspect of it is finding the proper space. And finally, it can make or break the sale of your practice. Would you prefer your lease works as an asset or as a liability? And it gives you leverage as well. So I have a question that's a very relevant one right now is, what are your thoughts on the government support program for commercial rent? Do you think landlords will go for it? I can tell you right now, not many have, for a few reasons. We actually have one of our attorneys keeping very close to it and lobbying for it as well. And essentially the problem, this particular aspect that this doctor is referring to, is in Canada, where the government is incentivizing landlords to help with the relief of the tenants and giving them money. Now, a few problems with it is, one, currently, and now they still are finalizing, so keep that in mind, they're still tweaking and adjusting, but there's really no incentive for the landlord to. They'd be getting paid less if they went through the government. And so many landlords are not utilizing that if they know they can get 100% of the rent out of the tenant. So they're working still on a few details, but what we've seen and what landlords have been telling us is they're not going for it. They know they can get the money, they are looking to get it. Unless there's extenuating circumstances, they will not be going through the government program, for, again, generally speaking. But happy to go in a little bit more detail as well, one-on-one. The lease gives you leverage. As a long-standing tenant, this is why landlords love dental tenants, because you sign long-term leases, you pay your rent on time, which I can assure you many tenants do not, and you invest value into the space. Dentists on a per square foot basis are the highest in all of commercial real estate on a per square foot basis. It's immense value for a landlord and a property. So what should the office lease do for you? So first of all, it should provide fair and affordable financial terms. And I'm not just talking about rent. So I'm also referring to any sort of free rent, fixed stream period, tenant improvement allowance, so the money that the landlord's giving you. Keep in mind, not free money, so be cognizant of it. Depends on the evaluation they're putting in as it gets baked back into the rental rates. Any sort of landlord work, or what many of you are on, is what's called a triple net lease. And that includes a separation of base rent and triple net costs, which is made up of taxes, insurance, and maintenance, or CAM charges, common area maintenance, and you pay your proportionate share of those based on how much space you take up at the building. So there's typically an estimate, and at the end of each year, they reconcile, and if they've overcharged, obviously they credit back the difference. If they've undercharged, they expect you to top up. But critical to know what you're paying for. There's a doctor who had received a reconciliation statement that wasn't detailed and itemized, and it had a miscellaneous charge for $4,500. So I asked him, so what was this for? I don't know. Did you ask the landlord? No, I just paid it. I couldn't believe it. $4,500. You paid a miscellaneous charge. Critical to have full transparency on what the landlord is charging you. Long-term stability and security. So in most cases, we recommend signing a 10-year lease with multiple 5-year options to renew in most cases. And this will provide at least 20 years of predictability for the practice, for whether it's your practicing career or your practicing career plus facilitate the sale of the practice. Most banks now typically need 8 to 10 years of term left on the lease to finance an acquisition. And that's whether it's in the form of initial term and or options to renew, as long as the options to renew are transferable. And that is very, very critical. That is transferable. If they are not, banks can't utilize that as predictable term, and it leaves you exposed to landlords leveraging the option to renew language that's personal to you in a transfer to a buyer. And there's been a handful of cases where landlords have asked for something. One was $80,000. Another one was $20,000. We've heard them as high as $120,000 to $150,000 just for amending it from personal to transferable. So very, very critical to have long-term stability and security for the practice. Minimizing risk. So many of you, again, have signed your lease, either personally or have provided personal guarantee. Having some sort of limitation of that. If you've been there for a long period of time, you haven't missed rent. Shouldn't be unreasonable to remove the personal liability. It depends on the situation. We haven't talked about a death and disability provision. So God forbid something were to happen to you and you're no longer able to practice. What happens to the lease? Are you able to terminate? To assign? Very, very critical that these types of items are outlined through. Maximizing your flexibility. So talking about a right of first refusal to whether it's expand or purchase. If you're looking at potentially expansion in the future or investing in real estate, handy to have for that potential growth. It's an option, not an obligation. And again, it will enhance your ability to eventually sell your practice. So how to structure your post-COVID lease. So these are some, not limited to, but some of the clauses through your lease that many of you should be familiar with as well. So knowing, is there any pandemic language in the lease? What are my obligations in terms of alterations? Do I need to ask for consent to make any upgrades or adjustments? Is there a demolition clause? So does the landlord have the right to terminate my lease if they're looking to redevelop the property? If I'm looking to leave the space, whether it's relocate or no longer practice, do I have a surrender provision where the landlord can ask me to restore the space back to its pre-dental condition? Many of these clauses, and not limited to, can very severely impact your lease. The restoration clause, I was speaking with a doctor 3 months ago, and it was $32,000. She had no idea that was coming. 1,400 square foot practice. Critical to know what's in your lease. The assignment provision. So the assignment provision essentially states the saleability, the transferability of your lease in the event that you look to sell the practice. So given, it's a webinar in one way today, I'll walk through. I typically have everyone read it and point out some of the issues with this. Now, this is found in 75% of dental leases we negotiate, and many of which have been negotiated by quote unquote dental specific real estate attorneys. 75% of these are found in the leases we're negotiating of this exact verbiage. So what it states is, if the tenant should wish to assign or sublease the premises, it shall first have received consent of the landlord. So you need the landlord's permission in order to transfer the lease and sell the practice. Very common in commercial real estate. But what the problem is on many of these cases is, what's the process and what's the criteria to grant and withhold consent? Many leases will have outlined in it which consent shall not be unreasonably withheld. Depending on the process, the problem with that is, what's the definition of unreasonable? Very important, there's a proper process outlined through this that's flexible for not just the landlord and not just the tenant, that's fair for both parties. It goes on to state that the landlord has the ability to either A, grant the approval, B, decline the approval, or 3, terminate the lease. Imagine that, just for asking for consent to sell the practice and transfer the lease, the landlord has the ability to terminate your lease. What's your practice worth? What would you do to receive determination? It goes on to say that landlord would have the ability to revise the minimum rent. I was just speaking with a client of mine yesterday who just retained us for the renewal. This was the case. They were looking to assign their lease in 3 months. They have a buyer that they've been speaking to. This is in their lease. What happens if that rent increased? In their particular case, they were looking at a 30% increase to get back up to market value. How does that impact the practice sale? How much more would the buyer devalue that practice because now it's less profitable? Could they walk away? It also states in the next paragraph to make reference to consideration. In the transfer of the lease and the sale of the practice, is there any consideration, cash goods of any form in connection with it? Absolutely. You're getting paid for the practice. This is essentially what's called the sales proceeds aspect of your lease, where I referenced at the beginning of the course that 85% of dentists have this in there, or 80%, sorry, of some sort of version where the landlord's entitled to a percentage of your proceeds. How does that impact your retirement? It also states, as the last sentence, many of you don't realize that even if the landlord is consent to the assignment and the transfer of the lease, that you would remain liable for the lease obligation should the buyer default. And you'll notice there's no expiry. And if you have signed a personal lease or a personal guarantee, that's both a business and you personally. There was a doctor in January who I was speaking with who had been in his space for 38 years. Landlord was there for 21 of them. Patient of his. They were quote unquote family friends. Doctor had conditionally sold his practice, $1.9 million. He went to his landlord as per his lease to request consent for the transfer, quote unquote family friend. The landlord said happy to, on one of 3 conditions. 1, your rent goes up 40%. 2, you pay me 50% of the sale proceeds, 50, which for those of you for quick math, that's $950,000. Or 3, I terminate your lease. What would you do? I can tell you they're not family friends now. There was some choice words utilized, but what would you do? Imperative that you have this assignment and subletting section properly structured to allow for a smooth transfer when you look to transfer. Now, a big and important aspect of this is the tenant lease cycle. Many questions I get is, when do I start this process? When's the best time? We recommend at least 24 months out from expiry is the ideal time to begin preparing and negotiations for the lease. For a few reasons. Again, one, it takes time to relocate a practice. Not to say you're looking to, but it gives the perception to the landlord, if they're being unreasonable, you have the ability to. Because they know the closer you get not only to your lease expiry, but your other critical date in your lease, your option to renew deadline. It's typically some sort of combination of 3 months, 6, 9 months prior to lease expiry, 12 months, or some sort of combination of you have to express it between 9 to 12 months out from expiry. The closer you are to expiry or to your lease expiry, if you have no options, the less leverage you have. Because they know how long it takes for you to move that practice, how expensive it is, how much of a headache it is. So what are they willing to do? Now, not to say if you're month to month, and I hope no one here is a month-to-month tenant, as dentists should never be at any point. Upon 30 days notice, you or the landlord can terminate the lease, puts you in a very vulnerable position. So I hope no one is, but if you are, not to say all leverage is lost, just a very, very, very different type of strategy for the negotiation than when you're 2 years out. So the earlier, the better is a lesson here. That is a major leverage aspect and point for dentists. So some of the landlord negotiation strategies. So to go through a few of these, what's working? Think with them. What does it stand for? What's in it for me? And not just for you as a tenant, what's in it for the landlord? If you have 8 years left on your lease and you're talking about a rent deferral or abatement, they have no reason to have to talk to you. You've got 8 years left. If you have 2 years left, again, what's in it for me? A renewal conversation. If you have 8 years left, how about if they're not agreeable to a deferral with interest if you need it? Again, if you need it, obviously trying to avoid more money if you have to. But what is in it for me, or what is in it for them? You need to be thinking that as well. They don't just hand out things for free, typically. When does your lease expire? Very impactful in terms of how to approach the conversations, whether it's a abatement, renewal, relief, expansion, transition, all the above. Tenant improvement allowance. So keep in mind, it's not free money. Sometimes it's more advantageous to take less from the landlord and more from the bank. Some cases, the opposite. All depends on the evaluation. So what do? You take action now. Again, the sooner, the better. It's been an unprecedented opportunity, not only for renewals and new starts, but expansions as well. Looking at long-term lease renewals, landlords have been very, very open in presenting attractive terms and conditions because of the time right now, where other tenants may not even be paying rent or some sort of portion. Unfortunately for them, typically most other tenants can just pick up and walk away with minimal expense. Fortunately for a dental practice, that's not the case. Resetting financials. So again, with all of the uncertainty, there's been a big opportunity to reset or get better financial rates. Whether it's rental rates, free rent, fixed rate, all of the above. Now, again, this all depends on your specific situation, your goals, your vision, what's transpired so far. So if you've been continuous in default or you're $40,000 in debt to the landlord, likelihood is a very different type of conversation, but an unprecedented opportunity. Similarly for new starts, I've touched on this a long time, whether it's financing from banks, lenders, but as well from the landlords, what they're willing to offer just to get you into the building. In addition to equipment and supplies. So we have the data and the access to the data, their proprietary data in terms of rental rates, comparables in any given market. So we're able to determine if you're overpaying in rent or not. Strategies for success. So this is our 8-step process to ensure that we are maximizing our success rate for the negotiations, not only from a financial standpoint, but from a legal standpoint as well. Gathering all the documentation, identifying your practice goals and career goals, reviewing the office lease for risks, preparing the market research, outcome and strategy development, before even reaching out to the landlord, completing all of those. Then typically first comes the economic and financial negotiations. That's what the landlord's interested in. What's in it for me? Then we get onto the legal terms and provisions. To give you an idea, the economics typically takes, on average, 15 hours plus. The legal work, 35 hours plus alone. The financial review and execution. So we fully review as if we've never seen this lease before. At the end, you'd be surprised how many landlords forget to reinsert something we've already negotiated, or by accident send the wrong version. Always, always, always review prior to executing. Now we're just near the end here as well. I will be answering some questions in just a few minutes here, as well any outstanding. So for everyone today on the webinar, one of our services is a critical dates and risk analysis. So it's typically essentially a $1,500 value, $1,495. And it's essentially an economic and legal analysis of your lease, where our leasing team will do a deeper dive into the market in terms of rental rates, comparables, as well as our proprietary data to determine if you're overpaying in rent or not, while our legal team goes through your lease in detail, so highlighting all of the risks, exposures, and liabilities. We schedule a call with you. Typically, it's about an hour long, and we go through everything in detail and a treatment plan. So whether you're looking for any sort of a rent deferral, rent abatement type of conversation or question, or how to approach the landlord, how to say it, very specific on words, or if you're exploring any sort of expansion, renewal, starting up a practice, acquiring, we're happy to walk you through what to expect through that process. Or if you're looking to transition as well, or if you're an owner occupant, then structuring a lease in between the practice and the real estate entity to ensure that it's properly structured based on your goals. Now, I want to thank everyone for joining today. All of the attendees today for the webinar, you do have the opportunity to have a complimentary lease review with us. So again, everyone that Cirrus I was just explaining, any attendee today, you can request a complimentary lease review, or a lease review that is complimentary, and will provide feedback based on your specific situation, your specific lease situation, and your goals and vision for the practice, not only in the short, middle, but the long term as well, and provide feedback for that and essentially a treatment plan for it. So if you are interested in the complimentary lease review, what I will need is a copy of your original lease, plus any extensions, amendments, estoppel certificates if the building's been sold, any assignment agreement if you've purchased the practice, any riders, and any supporting documents that are relevant to the lease. Preferably all executed copies, as we want to ensure that we're talking about the final version of it. Send it to info@cirrusconsultinggroup.com. We'll begin our due diligence immediately, and myself and associates will be reaching out to schedule some times in the calendar to discuss. But I will be answering questions now, so I appreciate those that need to go if they have other webinars set up. Thank you for joining as well, but I will be going through the question and answering as well. So in terms of previously, there was the question regarding the condominium and fees and so forth. So that'll depend on your condominium structure and the agreements within. So that one we'll have to connect with separately on, because that's very specific to where you are, state, property, etc. So in terms of one of the questions regarding government support program in Canada, could we negotiate with our landlord to cover what is not covered by the government? Then the landlord will get 100% of rent and the tenant pays 50. So the way it works out, there's always a conversation and potential conversation to have. So again, this is a situation regardless of where you are in North America, where the landlord is under no obligation to negotiate any sort of extra terms and conditions. Doesn't mean that they won't. So this is one of those conversations that it's absolutely could be a negotiation. Now, will they accept only 100% of rent in whatever version of it? That's obviously to be determined, because what's in it for them? They still have to go through the headache of going through the government. There may need to be more, but these types of conversations, the landlord's not obligated to, but can absolutely be part of the conversation. Now, in terms of how to approach it, that'll be very specific in terms of where you are, what your lease situation is, your expiry, and so forth. So this particular question, for more specific answers, I'll be able to give through the lease review as well. So a question here, what is the average cost of constructing a new lease? So I guess it really depends if you're an owner occupant, if you're looking to lease, what type of property, where it really depends on the scope of the project. So that one we'll have to schedule some time to go through. And if you don't have a lease, you can still schedule a lease consultation. So we'll go through, if you're looking to start up or acquire, what to expect, what you're looking for in terms of goals, vision, and then we'll be able to walk you through based on all of those variables as well. So a question here is, your company reviewed my lease on my last 5-year renewal, or last renewal 5 years ago. Should you review it again post-COVID? Absolutely. So there's many clients of mine that, whether we worked with last year, 5 years ago, 10 years ago, we've reconnected with, just to see if there's an opportunity based on their situation to help improve it, whether it's on a rental rate standpoint or a rent relief standpoint. I mean, worst case scenario, you're in the same position today, but there's certainly been a big opportunity. So even if you've had it reviewed, whether it's 5 years ago, for example, absolutely, it's a good opportunity to review it now, as many things have changed, particularly with COVID happening. So I certainly recommend that we schedule that as well. So I appreciate that, Dr. Kraus, the compliment there as well throughout. So they used us, very happy, excellent, great lease, answering questions, and highly recommend. So I do appreciate as well. And so a question regarding rental rates. So do you think landlords will be open to discuss about decrease in rent and revenue when revenue has decreased? And so it's an interesting question. This is one that I've received quite often, and it will very much depend on your situation, your specific situation, and what's transpired so far, particularly over the COVID time and previous. The relationship with your landlord, the type of landlord, where you are in terms of geography. There's a lot of different moving factors in terms of potential decrease. Has it happened? Absolutely. Does it happen in every case? Absolutely not. So it's very specific in terms of your specific situation. So we'll be able to go through that through the lease review as well. I know a lot of questions that I've had is regarding the PPP. So the second wave of the funds have been distributed as well. The third wave, I don't believe has, to my knowledge. I need to check in on that. But a big question is, well, I've already had my rent relief or deferment negotiated, but now I've received the PPP and would like to use it through rents. But I have to be paying it in order to take advantage of that. Can I talk to my landlord about deferring the deferred rent or abated rent to a future date and utilize my PPP? Absolutely can be a conversation. Will they agree? To be seen. Now, to them, that might be more beneficial as well. That's the aspect is, in any of these types of conversations, is knowing how to approach it, what exactly to say, and how to say it. Those are very, very important and often overlooked. Because based on certain situations, I wouldn't recommend a doctor even asking for a rent abatement or even mentioning it, because in that specific situation, they're not going to reply at all. So it's very, very important. And I've had doctors say, well, they haven't replied. I've reached out 5 times, but they've only been asking for a rent abatement. not many landlords look to that unless there's something in it for them. So very critical in that. If anyone has questions on a PPP and how to utilize it in terms of rent, that's been a big conversation recently as well, and that is for the US side of things. So if we need to renew our lease, would you be able to represent us and negotiate our landlord? Yes. Now, in terms of what capacity, what's the scope, we'll need to complete a lease consultation first in order to get an idea of your goals, your vision, what works need to be done, the quality of the lease. So if it's well structured, poorly structured, but absolutely the long short of it, we can assist in any sort of renewal, startup of a practice, acquisition of a practice, expansion, transitioning, or as an owner occupant, creating a lease, a custom lease in between the ownership of the property and the ownership of the practice. But many of the type and the scope of work that, in order to give me a good idea and our team of what work needs to be done, that's where we'll be able to walk you through it. If you want our assistance or would like it or would like to know how it works or operates, we'll be able to walk you through that at the end of the lease consultation as well. But we'll need to know what the scope is and how we'd be able to help, or if we'd be able to help through it beforehand. But it is just about 2:10 here, so a little over. I do appreciate everyone's time. If there are no more questions for now, or particularly specific questions, many of them will depend on your specific situation, goals, where you are in the country or North America for that matter, what type of landlord you have. So many of them will be able to be addressed through the complimentary lease consultation. So I do encourage, if you're curious what's in your lease, if you have a concern in your lease, if your lease is coming up for renewal, or you're evaluating a lease to purchase or start up, I highly, highly, highly encourage you to take advantage of this. It's free, there's no obligation, and it'll certainly be beneficial and insightful, similar to today, which I hope everyone has found this to be insightful as well. We go into a lot more detail and get more granular through the lease consultation as well. But I appreciate everyone joining today. Be well, stay healthy. If you have any more questions, please let us know. Again, it's info@cirrusconsultinggroup.com. And I look forward to connecting to each and every one of you. Take care. Thanks.